What's up, everyone? It's Eric with Option Edge, and today I want to show you a strategy that I put on today in JP Morgan. It's called the three inside up strategy, or that's the trigger. Excuse me, that's the trigger, and the strategy I'm using is a bullish diagonal. So if we look at, I'm going to explain exactly what the three inside up trigger is. Before we do that, let's look at the back test and check out what the historical results look like. All right, so I'm using Trade Machine Pro. This is options backtesting software that I've been using for a few years now, and I really like it. Does a good job. So what we're looking at here is this diagonal strategy, and I can, if I can show you exactly what that is if I click on Edit here. So this is basically how it works. We are going to take a call, long call that's at the 50, at the money long call, the 50 delta, with a 60-day expiry. Okay, and then we're going to combine that with a short call that is only 30 days to expiration, and it is a little further out of the money. Okay, and this would be called a diagonal strategy. Um, the other parameter we have for this is we're going to close at. This is at, a lot of times I'll add 50% profit. Let's see how that changes things. We're at 262 there. So I'm guessing it'll be slightly lower if we do that 50% profit. So this is just showing you the historical trade results. In the last couple of years, we've had 6 wins, 1 loss. Average win was $144, so almost 50%. And the average loss was about the same. So sort of good risk to reward there. So let's go over exactly what this three inside up trigger means. Okay. All right. So I'm using Trade Machine's own definition. So this talks about, lets us know exactly what the software is doing, and how the software is uh, evaluating these triggers. So 2 days before the actual trigger, so 2 days before the trigger goes off, the stock has to be down. So red candle to the downside. 1 day before the trigger is an inside candle. So, and then they explain how they use the real body, so not the open, the close, so the open, the close, and not the high and the low. So to clarify, the open and close of the second day must be inside the high and the low of the day before. So first, so red candle, then the second candle is going to be within that first candle, and then the third candle just simply has to be up on the day. All right, so let's go take a look at the chart and see where that stands. All right, we're looking back at the chart. If you remember, the criteria is first candle has to be down on the day, so large red candle. Second candle has to be within this candle, the first candle, and then the third candle simply has to be up on the day. So this is a three inside up trigger. Okay, and the last time this occurred was on September 27th. So, or September 22nd. Okay, so if you look here, similar situation. We have red candle, then we have another red candle within the body of that candle, and then the next day we have a green up candle. Okay, we're up on the day, and you can see where that ended up, resulted in a very large gain. And you can see, yeah, we basically sort of have the same setup here. The only thing is, and actually, what's interesting is if you look here, the 21-day moving average acted as resistance both this time and that time. So tomorrow, hopefully, we'll see a large gap up just like this here. And so I'll show you on Robinhood how you select this trade. So let's go over to Robinhood. All right, we're on Robinhood right now. So remember, we're going to, let's first select the call, the long call. So if you remember from the back testing software, we're going to choose a call that's 60 days out. Okay, so February 18th is the closest to 60 days. So this is going to be about 60 days, 67, 68 days, about, 69 days. So we're going to pick a call, so I'm going to pick the whatever's closest to the 50 delta. So that's 46. This one, if you want to go a little bit more in the money, you can, but that's sort of farther away. Next, so we're going to go ahead and select that. So we're buying the call that's 60 days away. Excuse my notifications that popped up there. So then we want to select the what's 30 days away. Okay. So today was December 7th. So January 7th is 30 days away. So we want to sell a more out of the money call, the 20 delta, whatever's closest to the 20 delta. So if we look here, we have the 170 is at 25. Next one is 175 is at 14. So I went ahead and chose the 170. Okay. So this is the trade. This is how it looks. Okay. Profit and loss diagram. So our break even point is virtually, right where uh, right where we're currently trading at. Break even point is at $1.6266. We're at $1.6257. So literally 9 cents higher. So even if this thing barely moves, if it just sits where it's currently at, then we're going to profit. As long as we move up a little bit. And this is what is so good about diagonals and when you sell the shorter duration call. If we were just to buy the call here, the 165, just get straight long. Let's take a look what happens. What you're going to see is even if we move up a whole lot, we're not going to profit. So or we might not profit. So if we delete that, so look at our break even now. So now we have to move almost $8 higher, okay, for the break even to happen. So, and the other trick we have to know is if we go back to the back testing software, something to know is we're going to close all legs with front month options. So that means the front month. This is the shorter dated option is the front month. The longer dated option is the back month. So if we let this strategy play out to its full extent, then we're going to close out on January 7th. If we go back, January 7th was the date we selected to sell. So the profit loss diagram also shows what it only shows up to that front month option. So something to know. And that's really it. That's the strategy, bullish diagonal strategy, three inside up trigger. It's one of my favorite triggers. Seems to work well. So yeah, we'll see how it goes. And happy trading. And as always, this is not financial advice. Like and subscribe. Thanks.